Hi everyone, and welcome back to Atlas Crossings. Today we talk about the stock market again, but we will be highlighting the importance of understanding the underlying factors, the underlying value of a company when you invest in the stock market. So you're thinking of investing in the stock market and you're thinking, how do you go about it? What sort of strategies do you apply in your investment? And one thing you need to take into consideration is the importance of understanding the underlying value and factors that drive the stock price, that drive the share prices on the stock market. You might have done some research already, and you will hear a typical misconception of buy low and sell high. But investing in the stock market for a long time is more than just buying low and selling high. You have to understand the fundamentals of a company. You have to understand what factors actually drive the share prices of the company. And it goes beyond just looking at the share price. You have to understand the basic fundamentals. Something that is key to understand is that every company has a story, and every share price you see on the stock market actually has a story that is connected to its company. What we want to do as investors is to try to understand what is the story that builds the stock prices or the share prices that we see. Is it a new product? Is it customer loyalty? Does it have to do with a strong product base? Does it have to do with a very large market? Policy-wise, does it have to do with any of those factors? So we can look at a company and decide, well, the share price doesn't look good. It has dropped by 10% in the last 10 weeks. However, the company has a very strong potential for growth and has shown a strong potential for growth over the years, but is experiencing decline in the share price. It's also worth understanding what might be causing the decline. However, overall, we can see the company has a very strong potential for growth. On the other hand, you might see a company where the share prices are going up, really going up, and in recent times what we call meme stocks. Now, you might be fascinated by the level of growth experienced by these companies' share prices, and you're saying to yourself, if you get in on this growth trajectory, you might be able to generate or experience some significant returns in your investment. However, we know that these meme stocks that are driven by almost no underlying value, it might just be driven by any sort of information that is not substantially a long-term impactful information. Now, what that means is getting in on such assets or such stocks might be detrimental to our investment plans. Now, we have seen some stocks described as meme stocks or stocks that have experienced significant growth over a very short period of time that eventually declined in the same way it actually went up, possibly even declining, less than what it was when that growth spree started. An example of that is GameStop. GameStop experienced significant growth in share prices and eventually experienced a massive decline. What you want to know is, what are the fundamentals driving the share price of an asset, of a stock? And that's the important aspect of what this video is about. In reality, you don't need to be an expert to understand some of the factors that drive the share prices of the companies on the stock market. Our everyday lives can give us an understanding or can give us a hint as to what is basically happening within the macroeconomic environment, understanding some of the geopolitical factors that are happening within certain regions. Now, you can also invest in companies that you typically use their products. An example is maybe you drink soda, Coca-Cola is an example. You walk on the streets, you know that you see different type of cars on the streets. It might be a Tesla, it might be a BMW, it might be a Mercedes-Benz, it might be any of these companies. And you're saying to yourself, well, these companies have been around for several years. I wonder what the share price is and what the return on investment could be. And that's the basic question you can ask. And that allows you to do a simple research on your computer to understand what sort of returns they generate over a 5, 10, 15-year period. You can also think about what sort of policies that the government or the global community is gearing towards. Now, what we know is several countries are beginning to ban the production and sale of diesel cars. Some of them have an ultimatum to stop the production of diesel cars in a few years. Now, what that tells us is that the motor manufacturing company is going to be gearing towards EV cars. And we already have a manufacturer that is leading in that space, and there are quite a lot of them that are already leading in the EV manufacturing, motor manufacturing space. An example is Tesla. Is to go on to see these companies, understand what the share prices are, understand the other factors that are driving the share prices, whether it's customer base, whether it's a large market, whether it's innovative technology. These are some of the factors that can tell us and point to us the potential of that company and its ability to withstand the different rigors or difficulties or challenges within the market in the future. As an alternative, you can simply track and invest in an index. An example of an index will be the S&P 500 of the FTSE 100. Now, you don't need to know the individual companies that are listed under this index or under the S&P 500, for example. What you potentially know is that it contains the 500 biggest companies, and that will change as if the companies fall off or if new companies, are added or replace some of the companies within the S&P 500. But what you're doing is you're investing in that index and you're expecting returns based on investing in that index. On average, the S&P, for example, generates about 11% returns annually, and that's not a bad investment. And investing in such a space is basically for a long-term period. As you build your investment portfolio, remember it's not just about buying stocks. It's not just about buying low and selling high. It's about buying into the future potentials of a company. You're thinking about a company's long-term growth and you're buying into it. By understanding the underlying value of businesses, you can navigate the stock market more successfully. You can be more confident when you invest, especially taking on board opportunities, long-term opportunities within the investment market. And that is that for today. Remember, we've talked about investment in various other videos. I'll put the link in the description. Thank you for watching all our videos, and for those who have subscribed, thank you very much. And don't forget to continue to show up.